Hello, oracles. Well, here we are. The Fed just cut the rates 50 basis points. We are looking at very similar times to back when we saw the great financial crisis back in 2007 and 2008. Are we going to have a repeat? I don't know. I sure hope we don't. But just looking back at those times, looking back at any recessionary times whatsoever, there's typically three different categories of people that come out of this. The three different categories of people are going to be the people that thrive out of this, the people that survive coming out of it, or the people that take a dive coming out of this. Now, in the time itself, very tumultuous. Nobody knows what's going to be going on. People are just scrambling to kind of do their best. Some people who have been through it before, typically those are the thrivers, understand what's going to be going on, have prepared themselves properly to be able to get through that time and thrive on the way out of it. Some of those who survive have to do a lot with luck, and then those who take a dive just kind of saw the short end of the stick. So today we're going to kind of discuss how to prepare yourself or what you'd expect for each one of those three, maybe kind of set yourself up to be in one of those three categories, and probably don't want to set yourself up to be in the dive category. But if you anticipate possibly being in the dive category, how can you prepare to maybe be in the survive or thrive category? So we'll get into all of that in just a minute. If this is some content that you guys like to see, please hit that like button down below, subscribe to the channel. It really helps with the algorithm and helps get this in front of more people's faces. All right, so let's go into the three different categories here. We're going to go into dive first because dive is going to be the easiest and nobody wants to be in that category. The people who are in the dive category don't have any savings set up. They're basically living paycheck to paycheck, which unfortunately is a lot of people that are out there right now. And even going paycheck to paycheck, they might be like pushing off some bills here and they're not paying off other bills, really struggling to get by. And then while there's a lot of people in the lower class who do get a lot of money from the government that are going to help them get through this and kind of survive based off of that, there's some people who are like just above that, who, make too much money to get any sort of government funding for themselves to help them get by, but they make very little. So they're right on the bottom end of that threshold. And they're going to be the ones who are going to be in the toughest place. They're going to be the ones who are probably going to take a dive. And when I say take a dive, that just means that most likely they're going to get laid off from their job. So, they're not making enough money right now. They're going to get laid off. And typically, if you take a dive and you can get through that, at that point, they're going to be able to take on some government money. They're going to be able to get themselves unemployment. They'll, be qualified for a whole bunch of other different government subsidies. So if we do get into a recession and you find yourself in that situation, definitely take a look at all the government programs that are out there to help you get back on your feet. I hope nobody gets to that situation. I hope nobody gets to that point. But if you do, please take a look at the different government programs that are out there that can help you get back on your feet, back up and running. For instance, I'm looking at my house right now, getting it eligible for Section 8. Section 8 funding is going to be huge. That's going to help people, get back on their feet, get themselves some housing, because obviously it's going to be one of the most important things for you. So things like that, the ways you can prevent yourself from being in that dive category, if you can make this happen. And again, I don't know how much time we have before we get the recession, if we're even going to get it, but in any case, be prepared for this by obviously cutting down whatever bills you have. If you have done that, you've gotten yourself down to you really have no expenses. What else can you do? What other ways can you go out there, maybe learn a new skill, put your name out there to find another job now? Because if we get into a recession, jobs are already falling as it is. Unemployment is going up. In a recession, it's going to be way, way worse. So at this point, do anything you can to increase your income. Figuring out ways to do that are going to be the most important thing, because chances are you probably went through and figured out how you can cut your expenses as it is. And if you've been through that, figure out how to just earn more money. And I know people are like, I just don't have the time. I can't do this and that. You got to figure it out. I know it's not easy. You got to figure it out. Figure out some way of doing that. I was in a situation myself where I didn't have enough money coming in to meet all of my bills. I had to figure out how to make more money. Do I get a second job? Do I make overtime? Do I look for another job entirely? I started a YouTube channel. I started doing Beachbody coaching. Any little things I could possibly do to get any money coming in, helping somebody down the road, just, whatever it is. Hey, a construction guy just needs some help. He's going to pay me in cash. Cool. Little things like that to help you out, to get any sort of money coming in, to get yourself out of the tougher times that you're in right now. That's going to help you regardless of whether you get into a recession or not. But the only way you're going to be able to help yourself prevent that from getting into it is to increase your income. And that's by increasing your value yourself, increasing your skill levels, all of that. So that's the dive category. And again, I hope nobody gets into that, but that's going to be the dive category. And it's not going to be easy, but whatever you're doing in it right now, make sure you go out there, improve those skills, and make some more money. Next is going to be that survive category. Now, survive is kind of those people who are making enough money right now to get by, maybe have a little extra money to invest a little bit here and there, could probably go through their expenses and say, hey, what expenses do I not need? And really kind of thin those out right now to put more money on your own personal bottom line to be investing, putting some more money in savings, emergency funds, whatever you need to get through this. Right now would be the time to do that. I mean, realistically, it's always the time to do that, but anticipating a potential recession is definitely the time you want to cut down all of those unnecessary expenses, really kind of cut way back and pretend that you're in a recession right now to put that money on the bottom line so that you can put it into savings, emergency funds, and maybe invest some right now to be able to get yourself some more cash flow through possibly dividends going through those difficult times. And now the survivors are going to probably fall into one of two categories. You're kind of right on the fence there. And, if you don't end up losing your job through this, you can easily become somebody who thrives coming through this. If you end up losing your job, you can easily fall into that dive category if you have not put yourself into a situation where you can survive and get through this. If you're saving that money, you've got the emergency fund, you've got a little money starting to be invested, you've got those skills that are built up to, hey, if you lose your job, you can always go and do something else on the side, cut lawns, help somebody with construction, whatever it is, because construction's always going to be going on. There's always going to be somebody who needs help, a handyman or whatever. So improving your skills in that facet could help you if you end up losing your job to prevent you from going into that dive category. Now, if you're going to be that survivor who doesn't lose their job, now you're on the glorious end of things because, hey, everything is going to be coming down in price. It's going to be a really crappy market out there. The entire stock market's going to be falling. That is the prime time to be buying. So if you have already cut your expenses, you're learning to live with less, and you have that extra cash flow at the bottom line, guess what? You can now buy income at a discount. So while you might not hit that thrive category while we are in the recession, you are setting yourself up to be booming on the way out of it. Fortunes are born during bear markets. If we get in a recession, we will most definitely be in a bear market. So if you have that extra cash flow coming in, you can buy all of that income at a discount. As we come out of that, that's where your fortune is going to be born. You're planting the seeds during that recession, taking that money and planting those seeds at that time, and they're going to grow into magnificent trees coming out of it. Think about during the great financial crisis when we went through it, anybody who was buying stocks during that time, heck, most people 401ks at that time, you're just dollar cost averaging into it. You had no idea money was going in, and those 401ks during that time grew significantly over the next 10 years after that. Same will hold true during these times if we get into a recession. Any stocks and companies that you buy during these times, you're going to be making out so much better on the other side, and that will continue to grow and pay tenfold over the next 10 years, most likely. Nobody knows what the future is going to bring, but if history is going to tell us anything is after a recession and the stock market is down, you end up seeing some very flourishing times afterwards, and stocks end up doing extremely well. You look back at history, and more often than not, you're going to see the S&P being very green versus being red. So you'll have more green years than red years. And if you're buying during those red years, which are typically during recessions, you will see much more green afterwards. And because you ended up buying at the low point or a lower point, that means that you're going to be seeing much better returns in the long run. And now we have our thrivers. These are people who, probably have already set themselves up and, maybe they're already independently wealthy and they don't need to worry about a job or losing their job at all. And they're ready for this situation. They're like, hey, please give me a recession so I can buy a lot more. And, of course, if they're going to be actually kind people, they're going to be concerned about the people who are the survivors or the divers in these situations, but they've taken care of themselves. They can be in that situation to maybe go out there and help people. I'm trying to put myself into that category. Again, buying this house and potentially getting myself prepared to buy a second one, maybe during these times, I would be able to now have two houses out there to be able to help people with Section 8, people who are struggling financially. That's kind of the reason I want to do this, is to be able to help people out. And part of my program is going to be bringing in tenants and helping teach them a lot of these different things, doing some financial coaching with them to say, hey, these are things that I can do to help you out and things that you can do to help yourself out. And I want to be able to make sure that the expenses that you have, like for instance, the house I have right now, everything's included. There's going to be no utilities that my tenants are going to have to pay. The laundry is included. It's not even coin op laundry, completely free laundry. They just have to supply their own detergent. But I want to be able to provide all of that for these people to genuinely help them get themselves out of that dive category, out of a category where they need to rely on government assistance. I want to help them get out of that. most people don't want to be on government assistance. They want to get out of it. And I want to be there to help them do just that. So, in that thrive category, people who genuinely want to help, like a Dave Ramsey says, hey, when you are in that category where you're independently wealthy, you can then go out there and give, be a giver. That's what I want to do. And while I still have a long way to go to reach my goals to get to be, a true giver, if I can kind of meet a, hey, I can help you and you can help me type of situation where if I can get some income coming in to help me push further into that thrive category and at the same time help someone pull themselves out of the dive category, that is a win-win situation. That's what I want to be in. So as a thrive category type person, if that's going to be you, make sure you're doing things like that. You don't have to, but just be kind, especially during times like that. It's going to be very difficult for a lot of people. Be a giver. And if you're going to be a giver and you want to do something like that, hey, there you go. There's a lot of win-win situations that you can have out there where you can both win. You can help somebody and help yourself at the same time. And there's nothing wrong with that. That's going to be a good thing. Win-win situations are awesome. So as a thriver, you can do that. And again, ways you can thrive. And as a thriver, you're going to have those opportunities. If you have cash flow coming in, you can really invest even more heavily during the darker times, during those bear markets, thereby increasing your wealth and value even that much more over the next 10 years or so after that. So again, survivors and thrivers can really just take advantage of this opportunity if we get into it to really kind of build that foundation of strong wealth coming out, whether it's going to be in stocks, real estate, whatever it's going to be. There are going to be opportunities. You just need to be ready for it. And if you're a thriver and you're going to be ready for that, that's awesome. But thrivers can also put themselves into a situation where, hey, maybe they spend on other things that they shouldn't be, or maybe they're a thriver because of their job, then they lose their job and they can slide down to survivor. So as a thriver, just make sure you've got that blanket covered so that you can get through all of this and not just have to survive, and you can still thrive on the other side. Now, of course, there's a lot of different, room within each one of those categories. There are some divers who are close to survivors, some survivors that are close to thrivers, and vice versa going the other way. So, wherever you are in that range, tell me in the comments below where you are. Where are you in that range? What areas are you struggling with? I can absolutely help you out in the comments here. I'm actually looking into doing some actual real financial coaching and set up blocks of time to help people as well as on a one-on-one basis, because it's what I want to do. I want to help people between financial health, physical health, and that's life health and mental health. These are three different categories that I'm going to be starting to get into. And you guys will be seeing that over the next year or so as I kind of get myself set up for that, freeing up some of my time to go out and really just help people out there, because that's what I love to do, is help other people and just help them because of I've been through the experiences. I've experienced a lot of this, and I want to be able to share that experience with others to help them get through it, because I know how awesome it feels to be on the other side of it, because I know how shitty it feels to be in it. And I just want to help people get through those times, let them know that they can do this. They can get through this. You guys can get through this. And even if you're going through a shitty time right now and it's not even a recession yet, what can we do to help you out? That's what I want to do for you guys. And again, if you have any questions, ask me in the comments below. I'll help you now. And as we get further along and I actually build this whole program up, I'll share that with you guys as we get there. So that's all I've got for you guys today. Let me know in the comments below what category you guys fall in, if you've moved yourself from one category to another, how you transitioned through it, and maybe you've got some ideas that can help people out as well. Thank you guys so much for watching. I appreciate all of your support. Have a great one.